Hello!
Hi.
Welcome to Friday with Friends.
Mans,
I hit it.
you hit that note so nice.
Felt pretty good about it. Thanks for tuning in. We're going live from Abby's page, and I'm going to get to sharing. Today, so Friday with Friends is our opportunity to answer questions that are going on in the marketplace, to talk about some things that are happening in the market so that you are always up to date with what's going on, so that if you have any real estate needs, questions, ideas, thoughts, you know that you can come to us to help you with all your real estate needs.
Exactly. Hi, everybody. I know I'm feeling really special that we're doing it off my page today.
I know.
Yeah, but we're going to share it onto Mandy's and maybe our friend team page too, so we can get everybody going. Make sure that when you pop on, you say hey. If you're experiencing any issues like this, currently, or thoughts about it, or stresses, or anything around student debt. Hi, Lori. Hi, Ben. Make sure you definitely comment below, and we'd love to answer your questions as we go on. If you're watching it later, make sure you do #replay so we don't miss any questions.
Yes. What are we talking about today?
Today we were talking about the S word, student debt.
What did you think? I have no voice, don't I?
I know. Her daughter got us all sick.
No, she's
Or maybe it was Miko, I don't know. But
who knows?
who knows? So
There we go. I'm almost getting it shared. Okie dokie.
We're taking a little bit. We're not the best with this whole stuff, but we're excited. So yes, we're talking about student debt today, and how so many
Krista.
people. Hi. So many people. It's so stressful. Like it's something that is so relevant right now with so many of our clients and our buyers and our friends.
And people think that they're alone. So the whole reason we want to talk about student debt, managing your student debt while you're positioning yourself to buy a house. Because people think it. And there was this stat, nearly 2.2 million student loan borrowers have a balance of $100,000 or more. Isn't that insane?
Mic drop.
So you're not alone, but then to
Yes.
say like, okay, well, what are other people doing? Because there's majority of our clients have debt. So what can we do to manage that so that you're in a really, really good position, whether you can buy now or whether we want to set you up for later. So that's the conversations we'll have.
Exactly, and just know that, again, you're not alone. Don't be intimidated by it. It's so common, and that's why we always say it's never too early to start the process, whether it's buying, selling, anything like that, because there's so many different options that you can start today to really set yourself up for success.
Exactly. So we're, of course, in typical Mandy and Abby fashion, we will have some numbers for you. So we have a couple steps that you can take that are actionable.
4.
And it'll set you up. Do we have 4?
We have 4.
Perfect. Hey, everyone that hopped on. Hey, Ashley. Hey,
Hi,
Michelle.
guys.
Hi, Carrie. So, okay, so number 1. The most important thing before we go anywhere is to know and to understand your numbers. And we mean by a couple numbers. So the first piece to knowing your numbers is know what your credit score is. Now, we talk about this all the time, but do you really know what your credit score is and why it is that way? Yeah. So just for a gauge, over 750 is considered like excellent. I don't know about you, but like my husband and I,
we compete with our credit scores.
We compete. Because we know our numbers, and it's so important for us to know where we're at. But my husband is Canadian, so he got a social security number like a day ago, and so we're like
a little longer than that. But
okay, we've been married for a while, but he's been working really hard to build his credit because of that. But know what your credit is, know why it is that way, and just to be really smart about why. Like, do you have a lot of debt, or have you been missing payments, etc.?
Yeah, exactly. So know your numbers. Number 1. What else?
I want to talk about the 30% thing.
Oh yeah, you love this because you've been here.
I love this. So the reason I care about so much about credit score is because I had a situation, I've shared it before, but it's worth sharing again. I had a situation where my credit was being pulled, and they were pulling it at the end of the month. And how I operated with my credit cards is I try to earn points. So I put the businesses, we put everything through credit cards, and I would pay them off at the end of the month. Well, they would be checking or running my credit on like the 27th or the 26th of the month, and I was looking like I consistently consistently was maxing out at all times, and I was so like just maxing out. So it looked like I have all of this debt when really I was paying it off every month.
You're like, I just want a free Southwest flight.
I just want Southwest point. So be sure that when you're looking at your credit cards and you're looking at your credit score, you're able to say, like for me, it was just a very simple thing. I actually paid off a couple times a month, but they say keep it under 30, ideal 10% of what your total credit line is. Try to keep it under 30% of what that spend is so that you're just paying that off.
And I think that's an important thing too, is a lot of times when you get your first credit card, your limit might be really low. And as you grow into, your finances or whatever it might be, going to your bank and having them increase that just so there's not as much stress around that. It's also a random thought I had. But no,
I love it. So number one, know your number, and that has to do with your credit score. What other number is important?
Know what your bills are and when they're due. So simple and so easy, but sometimes I'm like on automatic payment and I don't even think about them. They just come out and then I'm like, oh geez, I forgot about that. So really important to, super simple, but know what bills, the amount and when they're coming out, just so you make sure that you're staying ultra on top of those.
Yeah, and when loan officers are looking to qualify you, they're looking to see trends. Do they have late payment after late payment after late payment, or are they on top of it? And for my brain, I'm like, I hate when I have to have things, so some people don't like the auto enroll, you need to have more control of it. Just make sure you know that you need to pay things on time, because those are the things that are going to build up your legitimacy when you're going to the bank.
Exactly. All right, and what's the last one?
What is the last one? Know your interest rate on all of your debt. So some people will have like their credit card debt's really, really high interest rate. Even student loan debt can be really, really high.
Yep, exactly. So knowing those, because I know my boyfriend's actually going through, shout out TJ, right now, where he's trying to, he just graduated school, he, got his MBA, and now he's at this point where he's like, okay, how am I gonna start taking, building these down? And so what he did was he looked at, okay, what's the highest interest rate? And let's start with that one. Let's, work really hard to get that one done and then focus on the other one. So definitely know what's the highest interest rate and start working towards those first.
And you can even get a personal loan from a bank that you could pay off your loans and essentially refinance your student loans, consolidate your debt. Just make sure that you're talking to someone that is financially proficient? Is that a word? Yes, that knows that.
I don't know.
You lost me. May not be financially proficient. No, someone that's financially proficient that can speak to how you can really be smart and make sure that every penny that you are putting toward paying off your student loans is efficient and actually not paying interest or paying someone else.
Right.
So knowing your numbers, knowing your interest rate. So overall with the numbers, know what your credit score is, know what your due date and amounts due are, and 3, make sure that you know what your interest rates are, so you know how to make sure you're maximizing the principal payment instead of doing a whole lot of interest. Okay, so that's number 1.
Hi Jeremy, hi Tom, hi Scott.
Thanks for tuning in, guys.
Okay, so number 2 is managing your debt to income ratio.
Yes.
So this is a big thing that banks are looking at, is they're looking at, okay, we have a ratio of the amount of debt that you have versus your income. And there's easy ways, well not easy ways, but obviously the way to fix that is by either decreasing your debt or increasing your income. And that's a big factor that a lot of lenders, are looking at when qualifying buyers.
Yeah, and it's the main part. They look to see how much income are you bringing in compared to how much are those monthly recurring expenses. So when we talk about how important it is knowing those numbers is to really try to reduce all of those expenses. And student debt is in there, credit card debt is in there, but reducing those is huge.
Yep. Definitely. And when it comes to that, set goals, really understand, okay, banks are looking at this. I can either increase my income or decrease my debt. And what am I going to do? What are my goals going to be to decrease that debt? And really hold yourself accountable. Get a sister to hold you accountable. Really work to set those goals.
So I know that we have a couple clients who love it, and I love it too, is Dave Ramsey. He has Financial Peace University. And for those of us that are working through debt, it gives you just the groundwork to be able to say, okay, in 1 year, I want to pay this off. So that means I need to set aside this much a month. And okay, well, what do I have to cut out? And then you start to really look at your budget and you're like, Where am I spending too much? So figure out something to hold you accountable to as we're setting these goals to either, we're talking about reducing debt. You could also set goals to increase income. Talk with your boss. If you're an entrepreneur, set goals to increase that so that you can kind of, work both sides.
I was, here you go. Want some water? I was listening to, my hair's all over my face. I was listening to a podcast yesterday, and they talked about also, like, with your partner, setting goals of saying, okay, we have 2 incomes, let's say. We're going to try and live off 50% of one income, and really setting goals to live by also.
Hi, Karen. Hey, Natalie. Hi, Karen.
Hey, guys. So when you have these goals personally, then you can say, okay, if I'm only living off, 40% of one income, now we can save all of the rest of that and really work towards that. So when you have goals and you have strategies to achieve them, that's when you can say, okay, each month, you're doing the right thing.
And you think a year is like so long, you think like, oh my gosh, I don't want to wait, but a year can fly by. And if you are very methodical about it, you can be in a totally different financial state, not only in years and months.
Yeah.
And that's exciting too.
Definitely.
Okay, so number 3. So the first one was know your numbers. The second piece was managing your debt to income ratio and understanding that important piece. The third one is your mortgage options. And the whole point, we're not gonna dig too much into this. We have loan officers that that know all of it.
Yes.
And that's what their specialty is. But to know that you don't need to bring 20% to the table.
I know, it's amazing.
You don't need to have 20% of your purchase price to close. There are some really phenomenal mortgage options. There's your FHA, which is a 3% down. I'm sure they can talk a whole bunch more. Loan officers, reach out to us, we'll connect you.
We'll figure it
There's
out.
a USDA loan, which is 0%. Oh my goodness. Okay, I totally lost where we were.
So Apple now makes you have screen time. So it said, you've been on Facebook for 15 minutes. So it broke us up. So we're sorry, but we're back.
We're back. Okay, so low down payment options we were talking about?
Yes, low down payment options. You talked about USDA, which is so awesome, which is 0% down. It's amazing.
And now when you have those lower down payments, you may have to pay mortgage insurance, and you want to be smart with all of it. So make sure that we'll obviously brainstorm through that, but to know that you can have these low down payment options. VA, if you're a military.
So neat. And so USDA is really, we find it relevant for a lot of our, locations. It's a rural development loan. So a lot of people, Canandaigua, Farmington,
Ontario County is prime for it.
A lot of times, I had one that was a condo in Victor. Like it was a condo. There was houses right next door to it. So it wasn't extremely rural, but they still were able to qualify. So that's a really cool option. But there's tons of low down payment. And then there's seller concessions, which is basically asking the seller to provide a certain amount that goes towards your down payment. Now, every type of loan, there's different amounts of seller concessions, but we can utilize those a little bit, so you have to bring less cash to closing.
It's pretty. So there's a lot we can
so
do
many things.
when you're thinking of putting money towards your debt versus saving up for a down payment. That's where you just really make sure that you're talking with a loan officer, talking with a realtor to know where you should be putting that money, and that you don't have to be, nestling it away to save up for that 20% down.
Right? You don't need 20%. It's pretty great. There's so many different options. So that's number 3.
Number 4 is.
Oh, I thought we were gonna recap.
Oh,
my brain was like. Number 3. Number 3 is mortgage options. Just know that there's so much out there to, got really excited. Okay, let's keep going. Number 4.
What's number 4?
Number 4 is free money. Who doesn't love free money?
Free money. And what we basically are saying is you sometimes need to think outside the box, and you need to say, okay, how can I be smart and make sure that I'm not leaving any rock unturned? So the first thing is we want to talk about grants. Our favorite grant. Now, please note, grants are challenging. Like, you're essentially getting money from the city or from the state, and it takes some extra legwork. So I'm just starting with that. But the reality is, there's this thing called the First Home Club, and New York State offers it, and it's basically you need to show New York State that you can save every month for 10 months in a row.
Minimum. Could go longer.
I think up to 24 months maybe.
Yeah.
And at the end of 10 months, every dollar you have put in there, New York State will match with 4 of their dollars up to $7,500.
Guys, $7,500.
So now you have to wait 10 months. But for us, we find that so many of our clients are, hey, just get me enrolled in that.
Yeah.
And then if anything, it's a savings account. And if you don't end up buying, you don't end up buying. But it's a really great long-term option that is free.
Yeah.
Now there are income restrictions to it, but they did just increase. So it's worth checking out. There's also the U of R grant.
The 3 plus 3 plus 3.
$9,000
$9,000.
if you work at the U of R and you buy in specific neighborhoods, and those neighborhoods just increase, so they're there. And there's other lender grants, like or there's other city grants. Pathstone, I give a huge shout out. We work really closely with them. They also offer phenomenal classes that talk about this finance stuff.
Saving, different options, things like that. And there's also a lot of specific lender grants as well. So if you're working with a specific bank or not, you're still exploring those options. A lot of lenders have some free money to give away as well, which is good. But there's definitely a ton of different options out there. And the first home club grant is, or first home club is definitely an awesome option. A lot of people think that they need to sit through the class. I've heard everybody, we teach the class, so we love it. But
it's a phenomenal class.
It's fun.
No, but it's really good.
Yeah, but a lot of people say, oh, Abby, I don't want to, sit through the class. There's online ones. We got you covered. We can give you the inside scoop on that.
Yes. So there's so many other things. So you've got your grant options. You have with all of those, with its lenders, City of Rochester, New York State. Then you could also do it where you're setting it up as like gifts. Now sometimes you have a rich uncle, you have someone like that.
Be nice.
That they can gift you the money. So one, don't be afraid to ask. You don't want to take advantage. That's a very fine line. But know that some people do those gifts. What we've also had is, if let's say that someone wants to buy in a year, you make it very clear, hey, I am saving up for my house. I don't want a single Christmas gift.
No Lululemon leggings or video games.
You start to say, listen, this is the way I would love for you to bless me this year. Is I don't want these things. I would just love to go into an account. And sometimes people would say, oh, that feels weird, but I would challenge you to say that all they want is to know that you're getting what you want. So don't be afraid to ask, $25, $10, all those things can really, really add up. So a gift, a gift's another way too.
Yep. And then the other way, to really get creative is with a co-signer, a co-borrower. So this would be if maybe your credit score, your debt to income ratio isn't ideal, having a co-borrower come and join you to really co-sign on that loan for you, so you can utilize maybe their higher credit score, their better debt to income ratio, higher income, things like that.
Yeah.
So that's a really great option as well. And with that could help get better financing, like a better interest rate, better terms, things like that.
Exactly. So this number 4 piece is just thinking outside of the box. And again, if you have student debt and you're struggling to get approved, or you're trying to figure out what that path looks like, to know that we have this happen all of the time, and people get very, very creative, and we don't want you to think, oh, I shouldn't have to do that, or to be embarrassed by your student debt, because the statistic we talked about is that there's so many people that have over $100,000 in student debt, and that's the norm, and that's okay. And then we hope that these 4 steps. What are the 4? Know your numbers.
Know your numbers. Number 2, know your debt to income ratio.
Number 3, know your mortgage options available to you. And number 4 is make sure you're thinking outside the box and know that you have free money potentially available to you. That if you're doing these 4 steps, you should be able to really position yourself well to buy a house while you're still managing your student debt.
Hi,
Jerica.
So, yeah, and I think that's great. In every, we talked about so many different things, and every situation, just know, is super different and unique.
Yes.
So if you do have any questions, reach out to us, send us a Facebook message, text us, call us, email us, stop by our office, because there's so many different options that we can, really tailor it to say, okay, you live in this neighborhood, this is what we can do, this is your student debt, whatever it might be, and we can, really tailor it to you, because there's so many different options.
Exactly. You are not alone. We are here with you, and it's never, never too early to start, to even reach out, because if you're a couple years down the road and you're thinking, well, that's great, now we've got a head start to make sure your credit's where it needs to be, your debt to income ratio is where it needs to be, and you're in a great spot. So So that's all I got for you guys. Thank you for listening to Friday with Friends. Friday with Friends is our opportunity to talk about what's going on in the market and to answer questions so that if you have any real estate needs, you would love to give us the opportunity to work for you. Whether you're looking to buy, sell, or invest, we would love to be your go-to person and team. www.friendonyourside.com, or of course you can find us here on Facebook, anywhere by reaching out to any of us on the team.
Perfect. Well, we will, this will be shared after this, so definitely comment, watch, share with friends and family who you think could benefit from it, and we'd love to help.
Thank you, guys.
Bye, guys.